YouTube. So thanks for joining us. Obviously, disclaimer. We are not financial advisors. We do not intend to be perceived or received as financial advisors. Anything we say is for education and entertainment purposes only. Everything and any trades that you make will come with a risk. If you're unable to mitigate the risk, then please contact us and we can put you in contact with an accredited financial advisor. We are not individually accredited financial advisors ourselves, but we work in direct partnership with several accredited financial advisors. On top of that, if you are looking for an accountant, being as it's a new tax year pretty much, please message us and we can put you in contact with a crypto accountant. So where to do a Polish disclaimer.
Polish disclaimer, don't be an idiot. Yeah, if you lose your money, it's on you. Be responsible. At least a little, DGens.
Love that. So one of the first things I just want to talk about is the fact that I feel like a lot of stuff has happened in the markets. A lot of stuff has happened in the crypto markets specifically, and nobody seems to care. Like this time last year, this time when we was in this kind of equivalent area of upside action, we had every man and his dog posting about crypto, every man and his dog interested in crypto and getting involved.
You had ads on bus stops for like, buy Bitcoin on this app and this app.
Yeah.
Don't see it anymore.
We don't see it anymore, even though there is massive news and massive things happening. For example, let's just go to some of the ones that I've noted down here. I've just screenshotted in the last 24 hours. Well, one of them is, for a starter, is the fact that BlackRock have now are going to apply a trading system on their Aladdin portal. So the Aladdin portal is got over 20 trillion in volume in trades. And it's used by the Japanese government for pensions. It's used by Apple, by Google. So any of these big players that trade, which is pretty much most of them, use the Aladdin platform, which is created by BlackRock, who are the largest asset manager on the planet. And nobody has really gone, oh, this is great news for crypto. If all of these massive major corporations can now trade crypto just like they can trade stocks. But no one seems to.
Nobody cares, and that's the play. They're getting in, and once they are in position to execute on their plans, that's when it's going to be time again for the retail investor to start getting allowed into this space.
Allowed.
Yeah, allowed.
Well, that's a funny one that you say allowed, because we've been saying for a while about potential KYC. I don't know if you've seen some of the things that have come through from the European Parliament.
Yeah, they wanted to do KYC on private wallets, right?
Yep. So
bad news.
Should we break what that means down for the people?
Yeah, let's go for it.
Okay, so what that essentially means, first of all, we've got to understand what KYC is. So KYC is basically know your customers. So what it means in terms of crypto is it means that they are going to pass this law, is that any transaction from a crypto platform to a wallet, so that's either an online wallet or a crypto wallet, which would be like a Ledger or a Trezor, will have to undergo KYC. So you will have to provide your name, address, and some kind of ID to be able to make that transaction. And then all transaction over 1,000 euros will be registered to money laundering authorities.
So we're taking what's meant to be private, decentralized for the people, and essentially turning it into another tool for the government and for the elites, which totally negates the purpose of why it exists in the first place. It's like, I'm gonna eat healthy, so I'm gonna take a salad, but I'm gonna put 5 spoons of dressing on top and I'll pretend I'm still eating healthy. Well done.
So we kind of knew the argument for decentralized crypto was a bit of a myth anyway, because once things are over 1 billion, and if Bitcoin's at $1 trillion. That's not your everyday Joe that's moving that up 10%. So we kind of knew this was inevitable, but I just feel they're getting a bit extreme. Like 1,000 euros has to be reported.
Yeah,
that's.
But here's the thing: who is it going to affect? It's going to affect your average, everyday, normal people. It's not going to affect the rich.
Mm-hmm.
Rules are for poor people. They're not for rich people. Because if the punishment for breaking the rules is financial, if you have a whole lot of money, you don't really care. It's like speeding. If you've got 10 million in the bank and your speeding ticket is the same as the guy that has 10 grand in the bank, well, why would you care? You just pay your ticket and you carry on speeding. So the rules are for poor people because that's who is affected by it.
Mm-hmm.
So the only way out is to just make a whole bunch of money. It's the only way out.
That's the way. So that's that piece of news. Now, another piece of news that, again, I feel like we should definitely talk about is an asset that we've been saying is potentially going to produce higher returns than Ethereum, in my personal opinion, is Binance. Just because of the fundamentals that they have, they can do everything that Ethereum can do, but for cheaper, and it's backed by China. So I'm just like, well, and technically it's got the most amount of crypto flowing through the platform. So yeah, it's crazy. Well, what's interesting is that they are partnering up with the Grammys, which
that's big.
like
it's pretty big.
It's a pretty big deal.
Yeah, it's sort of a big deal.
And
I mean, they could do better, but Grammys is not too bad.
And no one cares.
No, I haven't heard about it.
No one cares. This should be like headline news in at least the metro.
Yeah, talk about mass adoption. Like that's it.
So I'm just like, hello guys, like is anyone?
That's why nobody's gonna notice when the CBDCs roll out. They're just gonna roll out. That's gonna be it.
Yeah.
If you're not paying attention, if you're not keeping like militant track on everything that's happening, it's just gonna get slipped under your nose.
So that's a huge piece of news, is Binance teaming up with the Grammys. I just don't even know. So there's that news. Then there's still more news. Yeah, guys, there's still more that's happened. So then we've also got what other announcement was there in crypto recently? The Apple situation. So let's just type in Apple digital IDs. Yahoo Finance doesn't want to bring that up. Let's just go to a usual research search. Apple digital IDs. So this happened. So most of this stuff I would normally do in the game, but I just feel like this is so important for like what's going on right now in the crypto space that it's kind of crazy to ignore it. So yeah, Apple's digital ID is finally here.
Is important because they're the ones printing the charts. It's not us.
Yeah,
unfortunately, I wish we could.
So now in Arizona, you can actually have your ID digital on your phone, which works perfectly with KYC and KYC adoption. Now, why would that happen? And then let's look at if has Apple done anything recently in terms of allowing people to buy crypto? Let's have a look. Apple Metamask. Oh yeah. So latest news, Apple integrates Apple Pay for Metamask. So I don't know what else you need to have bullish news in the market. Like, hello.
Nobody knows.
This is like a massive, like, how is this not huge? How is everyone not going, whoa?
Apple and Metamask. Like, I'll do my best not to swear, but wow.
That is the bullish news everyone was waiting for. And
where's the pump to 100K, guys? Where is it?
Where's everyone where's everyone's hype gone? Where's everyone's hype?
I command the markets to pump right this second.
But no one seems to care. But
we need to get this stream to 1 million people, and we need to pump the market.
100%, 100%. So that's that bit of news. Now, in terms of the markets, I've got some stuff that I want to kind of talk about in relation to the charts. So in terms of the on-chain metrics, let's see if we can see any data on the on-chain metrics. And again, I'm showing you guys how simple it is to get this information. On-chain metrics, Bitcoin,
it's all there.
Exchange, outflows. So what I'm looking for is to see how much Bitcoin is actually leaving exchanges. This is what we're looking for. So let's see if this one brings it up. Okay, here we go. So USD, so inflows to outflows. So we can see at the moment, we're down there, but we were up earlier. Go away, phone. So let me just try. Here we go. BTC held on exchanges, trade intensity, BTC price. But the main gist that I'm getting at is that there has been a massive outflow of Bitcoin out of exchanges. So what does that mean? That means somebody's buying a lot consistently, but no one seems to care. So let's stop all the news and let's go and have a look at some charts, because this is technically speaking. One of the things that I posted and in a couple of places was about in fact, I can do this from the Twitter, because most of the posts were on the Twitter. I think you probably saw them yourself, Lucas. Let's just go to the Twitter. Hopefully this is still sharing. We go home. We go here. Okay. Posts here. Okay, cool. So the first one here is this amazing move on Kyber. So I've been watching Kyber for a while. Our algo was printing out some crazy numbers, as you can see here, 42. That's what the algo said. So I was like, yo, I'm gonna at least watch this thing. Yeah. So I watched it. I got into this. I've been in this for a while. And then in the switch over that we did in October, November, switched out all of my Bitcoin into Kyber and some other assets. Switched out all my Ethereum as well. And as you can see, it's been quite rewarding and an incredible support line. I mean, that's a textbook support line.
Holes everywhere.
Yeah. So for me, once I started seeing this pattern starting to print of like a really secure support line, that's when I thought, okay, there's definitely something going on here that the algo's picked up on that I probably have missed. So I started it accumulating, and now it's up 200%. So from there, I've now rotated that into other positions. So that's the first one, just to kind of show, look, guys, people have become very obsessed with singular assets, whether that's I'll say the usual ones that people have become obsessed with are XRP, Cardano, Bitcoin, Ethereum, Doge, and people are just holding.
It's almost like they're being dogmatic.
Yeah.
I have to be right about this.
Yeah.
You don't need to be right. Just make money.
Yeah, exactly. Yeah. Look, if you're holding an asset and you can see that other things are moving, but the asset you're holding isn't, then just recheck your thesis and ask yourself, hang on a minute, am I holding on to this for an emotional reason or a logical reason? Don't get me wrong, those assets that we mentioned should eventually move to the upside.
Eventually, but what's gonna do it faster? Are you waiting for a 2x on your XRP so you can recoup your 50% losses? Or in the same time, you could be making a 4x on a different project that's in a different stage in its chart, and you could make your money way faster.
Yep. So an example of that.
XRP can still do well, whether you're in it or not.
Yeah.
You don't have any influence. You don't have the people behind it. You're not drinking with them every weekend.
A great example of that would be ZIL. Like, look at this. Is anyone talking about this? No. Is anyone shouting to the moon, woohoo, it's alt season, baby? Nope. But a 400% move in less than 2 weeks.
Yeah. Just have a look at Bitcoin dominance. It keeps dropping. I'm going to do another episode this week and talk more about like just charts exclusively, but Bitcoin dominance is just dropping down and down and down.
And that's exactly what we want. We want the Bitcoin dominance to drop because that's only good for the altcoins that we're holding, which have got a much smaller market cap, which means you can make a much bigger gain. So again, guys, just pay attention to the markets because right now things are moving. The media and the press might be showing you that. I've noticed that a lot of the media and a lot of the press at the moment is just focusing around Bitcoin. Like that's it. Like everything's just Bitcoin.
It's
Bitcoin,
a massive distraction.
Meanwhile,
when everyone leaves the space and it gets really boring, that's when you make all the money because that's where the whales are accumulating. That's where they're getting into their positions. By the time everybody just starts screaming, we will go into the moon, it's already too late. You should have been in 2 months from now, 2 months ago. Now is the time for you to be sitting there like a sniper and waiting to take profits.
100%. Like, look, on Bitcoin, if he's holding since January, that's a 47% gain. That's good. That's great. Yeah. That's brilliant compared to the stock market at this moment in time. But we just shown you, Zilka did 200%. No, did almost 400 to 500%. Kyber's done nearly 200% in that same time frame. So there's higher gains to be made elsewhere than in the main asset that everyone's talking about. And this is what I'm really concerned about, is that people aren't looking. And again, let's have a look at another one. I know ETH Classic was doing the same thing.
And here's another thing people get caught up on. They don't want to sell at a loss. But look, you've already lost the money. It's gone. It's gone. Yeah. Just because you hold on to it, it's not gonna make it come back magically. Maybe things will turn around, maybe it will come back. But at the end of the day, we're here to make money. We're not here to. There's no technology anyway. It's all speculation at the moment. It's all on a promise of what it could be.
There's a few projects that some things are doing that you can actually like play around with and actually do stuff. But the vast majority is speculation on ideas that could happen.
Guys, we're going to go bank Africa. We're going to bring IDs to Africa. I'm not picking on a specific project. Guys, we're going to do this. We're going to do this. And then when we actually start doing it, oops, that doesn't really work.
Yeah. And that's the thing that I think people forget with tech, is that it doesn't work straight away. And then even when it does work, it's very vulnerable. It's not.
Yeah, it's very new space. Like there's only so much you can do in like 10 years. As fast as things are moving, this is very much uncharted territory, and we're trying to do stuff no one's ever done.
100%. So this is a screenshot I took the other day of the Dow Jones. And as I've said several times, the Dow tends to move in correlation with the crypto markets, especially Bitcoin. As we can see here, the points at which it's hit on the fib is unbelievable how precise it is. And from what I'm seeing, I was expecting a bit of a downside turn on that, just temporarily, not permanently. But again, we also had a lot of correlation on the major crypto assets like XRP hitting the 200-day moving average. So from there, yes, we was expecting them to go down, and we saw a little red doji from XRP suggesting that there would be a little bit of a move to the downside. But then from there, I'm expecting from there, this is where things are going to really start popping off in the next 2 to probably 2 to 3 days, probably by Wednesday. If we hit this 0.763 area, I'd expect as soon as we get back to that 200-day moving average, we're going to go straight through it, is what I would say.
And everyone's going to miss it.
Yep. And what would you say for those that don't really understand the 200-day moving average? What would you say normally happens when we cross the 200 moving day average on any asset?
Well, it gets pretty bullish. And although it's like, to me, it's all made up, like all of it. Money's made up, numbers are made up, moving averages. Why is it 200 but not 205?
Yeah,
because it's a
nice round number. Yeah.
But the fact that everyone is looking at it is what makes it significant.
Mm-hmm. Mm-hmm. And a lot of people look at the 200-day moving average.
And most people will not get in until they feel like it's safe.
Mm-hmm.
They will buy. Let's talk Bitcoin specifically. They could have bought it at 33K a couple of months ago, but they didn't. Now it's at 46. They could have made 40% gains, but no, they were too scared. They were worried it's going to go to zero. Here's something to look out for. When things pump up, they do 50, 100%. The people who didn't buy, who wanted to buy, they'll be like, is it still a good buy? Probably not anymore. But when things take a dump and they're down 50%, they're going to ask you, oh, should we short now? Now that it's down 50%, should we short?
No.
Again, probably not. So you almost have to counter trade, first of all, your own natural instincts, and second, everybody else. And primarily look at everybody else to check yourself.
100%. I'd say I always use the same analogy that, look, you just got to treat it like buying a house. Because you're buying assets at the end of the day, and a house is an asset. So if you were given an asset like a house, the opportunity to buy it for 50K, and then it went down to 20K or 10K, would you be more prone to buy it? It's the same house, nothing's changed. It's just the same house, but now it's going for 10K instead of 50. Would you take your time and hesitate to buy it and then go, let me wait until it gets back up to 40? Or then go, you know what, let me wait until it gets up to 60, 70, because I know it's valued that it could get to 100. So I want to buy it at 70 and then sell it at 100. Do you want to do that? Would you do that with a house? Probably not. So why use any of the different logic when it comes to buying an asset? The only reason you would do that is because you don't understand the asset. That's what I would say.
Yeah.
And if you don't understand the asset, then you're gambling. So what I would encourage you to do is, for each bit, every hour of education that you give yourself, whether it's technical, whether it's fundamental, that's where you want to start investing more into the asset. Obviously, we don't have to do that kind of education when it comes to a house because you fucking live in it. So it's pretty clear the utility for it. Whereas with a lot of these projects, you've got to really start understanding the utility. And then when you understand the utility, you'll be like, oh, okay, this is a fucking great asset. Maybe everyone else is just blind and can't see or doesn't know what I know about that asset. So that's when you're getting yourself a bargain. And I showed a couple of charts just then of some of the things that had hit the 200-day moving average. And we're just now on the crypto total market cap. So this is total free. So this is everything excluding Bitcoin and Ethereum. And again, you can see the same correlation. Got an incredible support line just along here at 628 billion, and we can see again a great resistance line at approximately 818 billion, and again the 200-day moving average is slap bang on that resistance level. What we're expecting, a slight move down to the downside, and then from there, the moment we cross this area here, this 818 billion mark, that's when I would say the fireworks are going to begin.
Yeah.
However,
possibly retest as well.
Yeah, possible retest. However, at that point, you don't want to be buying. Like it's already you
should have bought ages ago.
You should have bought ages ago. You should have been buying here when there was a clear support line.
Definitely not for a long-term hold. Maybe for like a short-term flip, yeah, you can make your 10, 20%, whatever. But don't like moon hold the bag.
Yeah. Don't don't do that.
Not financial advice.
I'm just worried that that's what a lot of people are gonna do when like all the fireworks start kicking off in the next couple of days, weeks. One thing we definitely need to have a look at, without a shadow of a doubt, is Tesla. The reason why is because I'm sure some of you know or have heard that Tesla have now announced another stock split, which is
absolutely pointless.
Why?
What's the utility of it? You have fractional shares. You can buy 1 pound of Tesla. Who cares?
But I think this is because they've said it's because they want to, obviously this will help them get into the Dow. They've said it's because they want to start paying dividends. Tesla paying dividends, I'm not going to complain about. That's fucking fantastic.
Yeah, but don't they have better things to do with the money?
They do. But yeah, I personally think Tesla, Google, and Amazon all at the same time doing stock splits to get into the Dow is a move of safety because they feel like a recession is coming and they want to be all huddled together in the Dow, which has the largest inflows, which will protect them. That's personally what I think.
Yeah.
And we've recently had an announcement that the inverted yield curve has happened on the 10-year Treasury note. What that basically means is that whenever the inverted yield curve happens, we're kind of guaranteed a recession in 8 to 12 months of that happening. It's just historical. It's just what's happened for the last 30 odd years, I think. So a recession is pretty much guaranteed on the cards, technically, not necessarily fundamentally, but again, this is where I want to talk a little bit about the fundamentals of it, and I'm going to talk about it on the game again tomorrow. If you just look around you, if you just go to your local high street, you will see that stores are closed. If you are a business owner, or if you work in business, or even if you're working in any kind of customer facing thing, you will know that there has been supply chain issues, and you will know that people and businesses have over-ordered on their stock. And now there's this war issue and people are continuing to over-order on their stock. So when you over-order on your inventory and then you can't get rid of it, you have to do a big sale. But then what's also happened is companies have overemployed. So because there was a shortage of staff, companies are just doing whatever they can to get as many new staff in as possible. But what happens when all this stock that you've over-ordered on, you can't sell because the people don't want it? Now, why would the people not want it? Oh, because they've less income than they had before. Why have they got less income than they had before? Because inflation has gone up and the prices of everything has gone up. And one of the biggest areas where it's gone up is on people's bills. So people's disposable income has gone down. So even if you're offering your t-shirts that you used to sell for 50 quid at a 75% discount,
nobody wants them.
Nobody wants them. People ain't got the money. And if you're running a business and you can't get rid of your t-shirts, your trainers, your food, whatever it is, at a 75% discount,
you are screwed.
You are screwed. Because now you can't even order new stock because you've got to get rid of the stock that you've had from bloody January or maybe even December. So,
and then you've got old stuff and nobody wants old stuff.
And then what then happens? Then the factories and the manufacturers will start going, oh, well, people are ordering less. We'll just make less and increase the prices. And if they increase the prices, guess what then happens? The stores now have to increase their prices. And then we have this never-ending inflation issue. And this is what, whether we like it or not, is we can see it around us and it's happening and it's going to happen. And I feel this is what's going to cause this inevitable kind of, how do you stop this? Like, how do you stop this cycle of madness that's happening?
Collapse the whole thing.
That's the only way to stop it, really. So
no joke, but nuke the whole thing.
Yeah. So that's what I'm seeing might happen. So if we look at the Vanguard Total Index, or if we look at the VT, which is a representation of the whole stock market as a whole, if we look at this, we've had a bit of a recovery, but I would say this potentially might be a dead cat bounce.
So I have a theory that I've been talking about for the last couple episodes. I think all this is just an exit pump.
Yeah, 100%.
There is, so like people saying, oh, we're going to go back to 100, like we're going to go back to all-time highs, get 100K Bitcoin minted this year, whatever. I don't see that happening. There's one scenario in which I would see new all-time highs for Bitcoin and the entire crypto market, which that requires us to get into politics a little bit. So if you look at Biden's and the Democrats' approval ratings, they keep dropping. So it is almost, but I wouldn't say it's almost inevitable, but it's very likely that the next round of elections, which are coming up pretty soon, they're going to lose. So I wouldn't be surprised if they've come to terms with the fact that they are going to lose this time, and then they're just going to push the can down the road and leave the whole situation for the Republicans to deal with. So then whatever happens, it will be on them. And I think in the end, eventually a massive crash is inevitable. It's just a matter of time. Even if we do get the bull run back, even if we do get new all-time highs, this thing will crush so bad, it will be worse than anything we've ever seen before. And I do think instead of 100K Bitcoin, we're going to see a 20K Bitcoin this year.
Yep. And instead of a $1,000
and I'll be
Tesla
buying.
So if that happens, this is where we look at Tesla and we look at Google and we look at Amazon. Potentially, there could be bargains of a freaking lifetime, because these companies, their fundamentals wouldn't have changed. Tesla wouldn't all of a sudden have less factories. In fact, they're going to have more. They've just announced that the Berlin factory is now open. So they've got more factories, meaning they can produce more cars. And one thing that we do know is the rich have got richer, so they're probably going to want to buy new cars. And in this recession, if it does happen, which is very likely, look, if Tesla does a 10-to-1 stock split and becomes $100 a share, and then it goes down 60%, do you think whales are going to be buying Tesla stock in the droves if it goes to less than $50? I'm buying shit.
Case in point. Can we pull up the Bitcoin chart for a second?
Yeah.
I will make a point which I will happily argue with anyone. Let's look at, because here's the thing, if everything crashes 50, 60, 80%, the sentiment will be the world is coming to an end. Let's look at the last time, oops.
Oh, it's on this.
Let's look at the last time
everyone thought the world
is coming to an end. I will not name the thing because I don't want our video to get, fact checked or flagged or whatever they want to call it. 2020 March, this beautiful space right here, where in a singular day we've seen.
I think this is on weekly candles.
Is it on weekly?
Yeah.
It's on weekly. My bad. Let's switch to the daily. I'm not used to your laptop. It's like you get used to working on one thing and then you're working on something else. Where was we? We're still in 2021.
There we go.
There we are.
I haven't got it on log scale, that's why as well.
So, March 2020, everybody remember what happened? We've seen Bitcoin alone drop 56%. The entire world was on sale. And what were people buying? Toilet paper. And the same thing is going to happen again. And you are all going to miss it. And you're going to be kicking yourselves again for missing the second biggest opportunity of your entire lifetime.
But I don't think this is going to be the second biggest opportunity. I think this is
might actually be the actual biggest.
This is going to be This is going to be like the 1930s depression. The people that bought in the 1930s depression are the richest families that exist in the world right now.
Yeah.
If the powers that be knew that there was the potential for people, ordinary people, to become as rich as they are, do you not think they're going to want to keep tabs on them? KYC.
Of course. If you have power, the last thing you want to do is give that power away or give it to others.
And you're going to want to know who the hell has that power, who the hell has accumulated during a bit.
Who's making moves, who's doing what, who's becoming more powerful, more connected.
So yeah, it's just a bit of foreshadowing, guys. We just felt we should put this warning out there, and just let people know, look, this is what's happening. I'll quickly go through some of the things in my portfolio. So again, Civic is an asset that I'm quite bullish on at the moment. It's just one of my bigger positions.
No, messed up your charts.
It's fine. There we go. We can see. I mean, if this isn't saying that this is ready to go, I don't know what is. Look at that amazing support line right there. I mean, textbook or textbook? Pretty textbook.
And the RSI is looking pretty good.
Yep. Everything would suggest that this thing is ready to fly.
It's at a nice discount as well.
It's at a pretty good discount comparison to the all-time high of $1, and at the moment it's at about $4. So yeah, let's see what happens with that one. Another one which we saw was starting to make amazing moves. Cardano hit this support line. Cardano did a little bit of a double fake though, because it dropped below this support line. So I think that this was for me where I personally was like, nah, you know what, this thing's gone. But again, when you look at the potential gains that it can make,
if they can
$6, maybe a 600% move. However, for me, again, my favorite, one of my favorite assets that for some unknown reason never gets accumulated, no one's ever interested in. No one ever talks about it. It's Polkadot, the most popular interoperable chain. And what's
it's really just you and Ninja that talk about it, honestly.
It probably is, like in the whole space.
I don't care about it either.
Why? I don't get it. Like, look, in terms of accumulating an asset, like this asset and this technology is going to allow all of the chains that survive this crash to communicate together. So the only things that are going to survive, in my opinion, are things that are able to work together and are useful. This is pretty damn useful. So, but yeah, meanwhile, everyone else is looking at just nonsense. So that's that one. Another one, we got to look at Binance. I mean, for that support line, again, I'm going to say easily, I think this thing can get to 1,000. I think this
was 700.
Yeah, I think this
if we get it wrong.
I think this is the exact same scenario we had with Ethereum when the PS5 came out. When PS5 came out, I remember telling everyone, look, you can get Ethereum right now for £300 to £500. You might want to get some. Most people have got a PS5. They could have had several PS5s. The same thing's going to happen with Binance. They've just partnered up with the Grammys. They've just settled their lawsuit with the US government. So if Binance is now legal in the US, what does that do for inflows?
Pretty big.
So
pretty big.
Yeah. On my take profits on this one, happy to share them. 2,000, around 2,000. So nice little move potentially there on that one. We should expect to see that. I've said the goal point on this one is around here, around 450 52. Once we get past that area, I don't think it's going to come back until after it crashes. Litecoin, Ninja's favorite. Again, I'm sure people are starting to see these amazing patterns that are present. So Litecoin, I would say at least $500 on that one. What else? Name a project that you like. I'm just revealing my whole portfolio here, by the way, as well.
You know, like Solana, right?
You're really bullish on Solana, right?
Yes, I am.
Okay, let's have a look at Sol. I think I'll dump all my Solana.
Look at crypto.
Oh yeah. Yeah, that's pumping.
Yes, it is.
Yeah, that's good to go.
Yes, it is. I command this charge to pump.
And again, what a beautiful support line that is. Fucking hell. Jeez. Oh, textbook.
And
I mean,
TA-wise,
they've made it super easy. Like,
as far as I'm aware, OpenSea has just integrated Solana NFTs. And the last pump on Solana was due to them releasing NFTs. This whole thing, NFTs, and everybody buying Sol.
Yeah,
buy their NFTs.
Expecting some big things on that one.
The fees on Solana are fractions of pennies. Yes, it has crashed a couple times, but
and got hacked a couple times.
But nobody cares in the bull run.
Yeah, no one cares.
They only care in the bull run. And they're still in beta.
There's that one, and then obviously we have to talk about Terra Luna. We just have to, because these guys are requiring Bitcoin for bans. These guys are in an all-time high right now. And again, when it comes to these obsessives, right? I've not seen any obsessives with Terra Luna.
Yeah,
I've been an obsessive with Terra Luna from when I was in it, like all the way back here when no one cared. But you know, look, here's why I'm interested in Terra Luna, because ARK Invest are heavily interested in Terra Luna, and no one can tell me that these guys don't do their research. When it comes to research, yes, they get slated because their stock's down
and tools and everything that everybody will want access to.
Yep. Yes, their stock is down, but it doesn't mean their fundamentals are down. Their fundamentals are still accurate.
The fundamental underlying value of an asset, it doesn't go this. That's what the price does. So the fundamental underlying value, whether it be ARK, Bitcoin, whatever,
pretty much stays the same.
Remains pretty consistent and rises over time.
If it's run by a good CEO.
Yeah.
Which, again, coming back to the NASDAQ, most of the things in the NASDAQ and in the S&P 500 aren't run by good CEOs, and are actually run by dickheads and pieces of shit that don't actually know anything about business, because they're not on the ground themselves. So again, look, Terra, if you was holding that since February, 153%, it's now at all-time highs. Is anyone talking about it?
He's just saying he can't see the charts on our thing.
You can't?
Yeah.
Oh, no way. That'd be well annoying. Well,
yeah, that would be pretty annoying. Let me call him.
Damn. This whole time.
Okay, what's up? Yeah, I did see your text. Are we sitting on the same screen the whole time? Oh shit. Okay. Oh well. Are our voices still coming through though? All right.
Okay. What about now?
Okay. Can you see it now, guys? This is as live and authentic as it can be.
Can you see it now?
Kyc, can you see the chart now? All right. Sub G.
Sorry, guys. We just realized that you can't see what we're doing.
Okay, he says you can see the charts right now. So, okay, cheers, bro. Bye-bye.
Well, that's a bit annoying. But do you know why it's great? Because now you can rewatch it and do your own research, and everything that we talked about, go and look at the charts whilst having this in the background as an audio. There we go. That way people actually have to do the work. I'll just, again, tell people to look out for the really obvious support lines that have been printed all over the market. And I think this move by Terra is a good example of what we should expect a lot of the other assets that we just looked at to do.
When things trend, something I really like to look at is just levels being taken out. So if we look at this was resistance we couldn't break through. Clearly broke through it.
Let me do it. Go back down to it.
Yeah. Cool. Next, we got this one. Again, broke through it, crashed later, but came back, held, and now we've taken out this level here. Again, tried here, didn't, came back, and now we are here. So it will be interesting to see what's going to happen. Is it going to keep just going and going, or is it going to start breaking down? Personally, I don't hold any Luna because I started paying attention to it a bit late. But yeah, something for you guys to watch and keep track of.
Right, guys. Hope you enjoyed today's episode of Technically Speaking, even though you couldn't see half of it. Who knows? Maybe we did that on purpose so that you actually have to go and look at the charts yourself. Who knows? Or maybe we just made a mistake. Who knows? But ultimately, the ultimate narrative of what we were saying is the fireworks are about to begin because they've already started, as we've shown you with multiple assets. But don't become focused on one singular asset. Like, just do maths and just ask yourself, am I holding on to this emotionally or logically?
And watch out for the landmines.
And watch out for landmines.
When there's fireworks, there's landmines as well. You just got to tell which is which.
And one thing I would definitely say right now, because it's going to happen, is fucking take profits. Fucking hell. Guys, if things are going to pump 500%, 1,000%, you might want to take some profit instead of being a greedy dickhead and going, oh, I'm waiting for 2,000%. Oh, look, seriously, before this, 4 years ago, 10 years ago, where was you getting 100% return? Where was you getting 500% return, 1,000% return? You weren't. So if you're not willing to take profit at some of these levels, you don't actually deserve to make money, in my opinion.
The best hedge funds manager in the world, they make like 30% a year.
So,
and you've got 50% over a week,
and you're not taking any profit. Yeah, you deserve to get better. Right. Thank you very much, guys. See you later.
Have a